Recently, I've been seeing such an influx of this new hype train called smart money concepts. But what I want to distill today in our video is why smart money concepts is the new method of retail trading. Yes, I said it. The institutional way of trading you're all learning is the new version of retail, because it's not the strategy you're using, it's the place it's coming from, the mindset, which makes it a retail strategy. So with that being said, sit back and relax, because we're about to explore some secrets. Oh, come, look at the light, man. I know it's very bright. Come. Sit back and relax, because we're about to explore the exact same secrets I used to explore the Matrix, and how you can finally turn into a profitable trader using the same methodology and the same principles that I did. So sit back, relax, grab a cup of tea, enjoy the scenery, because we're about to go on a journey, man. Sheesh. You see, when I come into this industry, I was under the impression that there was a golden strategy out there. There was something I needed to learn about these financial markets. And once I learned that one thing, I would be immensely profitable and success would be crazy, right? But what actually happened was very different to what I expected. You see, for me, I found myself learning from all the wrong people, and they had the complete wrong mindsets. And that was why I wasn't actually succeeding in the market, because it wasn't the strategy that I was using at the time that didn't work. Now, truth be told, right, I strategy hopped at the beginning, I'll be honest with you, right? I tried everything. You know, you name it, right? I've traded it, whether it's harmonics, trend lines, support, resistance, London breakout, whether it's beat the market maker, smart money concepts, whatever sort of strategy you can think of, I've tried it. And what I actually found was that none of these strategies actually worked. But why was that? Why did none of these strategies work for me? It was not that the strategy didn't work, it was that I didn't work. There was something fundamentally wrong with me, which was why my trading results were not exactly how I desired. So what was actually wrong with me? Well, at the start, it was my expectations. I had the complete wrong expectations about the markets, about my strategy, and just about everything else in these markets, which was now causing me to mess up, make mistakes, and obviously not be profitable. So I want to circle back, because the first thing I mentioned was that my expectations were wrong. So when I first learned about smart money, I was under the impression that this is exactly how banks trade, right? I was under the impression that because I've now learned this magical golden strategy, I'm going to be able to be a 6, 7, 8 figure trader and life's going to be great. But again, it's not what we do, it's the place we come from. So when I started learning smart money concepts, because I had the wrong mindset, the wrong expectations about these concepts, it still resulted in me not being profitable, even when I learned everything about the strategy. So what were my expectations at the time? So when I learned about concepts such as liquidity, I assumed that liquidity had to be taken every single time. I assumed that any order block would work without certain validation criteria. I assumed that the order block had to work. I assumed that liquidity had to be taken. I assumed that imbalances had to be filled. But again, I had the wrong approach, I had the wrong mindset. And it's more than just understanding about technicals. There's so many other layers that really go into this, which makes your smart money trading retail. Because what you have to remember is that we are all retail traders, point blank period. And the reason why we're all retail traders, regardless of how we trade or the strategy we use, is because we don't trade at an institutional level, right? Unless you've got over $100 million and you become your own liquidity provider and you're connecting straight to the black box, that's the only time you're gonna really exit the retail realm. So it doesn't matter how you trade. Like, truth be told, I was very fortunate to get connected with some Citibank traders, and these individuals, right, they don't use technical analysis. They use fundamental analysis, economic analysis, and then run specific algorithms that now fulfill their orders over time. Yes, you can see that footprint on the chart. Yes, we know how that footprint works, but that's besides the point, because it doesn't matter if you know the footprint. It doesn't matter if you know about these certain concepts. What matters is that you have the right expectations. So there was two sides of it, right? There was expectations from technical analysis and the things that I learned, and the expectations from my own mindset and my own psyche on an individual basis. So again, from a technical standpoint, I would assume that because I saw liquidity, because I saw an order block, because I saw, a level of imbalance, it had to get filled right away. Because I found my entry criteria, I assumed that this trade had to win. And then what would happen now is I would expect of my mindset that I was going to win and I was going to succeed. But what would happen is when I would lose that trade, it would now contradict my certain beliefs about success and the certain beliefs that I held about winning and losing. Throughout my entire life, right, I had a belief that in order to succeed, you need to win all the time. I had the belief that I need to be right in order to make money. I also had other beliefs that I believed you need to work hard to make money. I also believed that money was hard to get. I also believed that money was scarce. I believed that you shouldn't talk to strangers. I believed that, money was the root of all evil. All these things that we were programmed growing up with. The day when everything really changed was that when I really looked in the mirror, I stopped strategy hopping. I stopped jumping from the golden strategy or the green grass, and I started to work on me. Because once I started to work on me, that was when my entire world really started to change. But what did I actually do? What did I actually work on? Well, firstly, I had to escape the retail mindset. Now, again, remember, we're all in the retail realm, right? We spoke about why, but what is the retail mindset? Well, retail mindsets, they have a very pattern-based mindset where they learn a specific pattern and they think because this has happened once and because it happens similarly again and again and again, they expect that once they see this exact pattern repeat itself, it's gonna play out again and again. But what you have to remember is that no two moments in the market are the same, right? It literally just takes one trader to say, you know what? We don't want to get in at these levels anymore for that whole idea to flop. And you may now be sitting there, and this is how I used to think when I would lose a trade. That would affect me and my self-worth and my happiness. I would think, oh no, because I lost this trade, now I'm a bad trader, now I've done something wrong. Rather than actually thinking in terms of sample sizes and taking my thinking from thinking on a trade-by-trade basis to now thinking in sample sizes. Now for me, that was one of the biggest realizations I had, which was, again, thinking on a trade-by-trade basis to now switching it to thinking on sample sizes. But what do we actually mean by thinking about sample sizes? So I had a belief system that in order to succeed, I have to win and I have to be right. Now, I had to also self-address that and think, where did this belief come from? Because I realized I don't trade the markets, I actually trade my belief system about the markets. And my beliefs are what now determine my actions, and my actions is what obviously determines my results. So because I had this fundamental belief that I need to win to succeed, which when I self-reflected, it came from the whole schooling system and just how I was brought up. Because, if you don't succeed in school, you're not right on your test, you get a bad grade, you fail, you now think, or this is how I used to think, right? And I would think, oh my God, I've got a bad grade, so I'm not gonna be able to get into university, I'm not gonna be able to get a good job, I'm not gonna be able to make money, so life's not gonna be good. So I subconsciously had this belief that in order to succeed, I need to win. So coming to trading, I had a bunch of unexamined beliefs that now affected my decision making, now affected the actions that I took. And because they affected the actions that I took, it now affected the results, obviously, that I got. So what changed? Well, I now had to assess that belief and say to myself, well, actually, do I really need to be right on every single trade to actually make money and actually be profitable? And I started doing the maths, right? If you haven't looked into risks to rewards, I'm sure you guys all know, but you don't need to win every single trade when you have a positive risk to reward. So once I started to understand that started to take me away from putting the pressure on winning on a singular trade. Because I believe that and this is why, again, I believe that smart money trading is retail trading because the people have the same expectation. Right? When I learned smart money concepts, I thought, oh my God, this is an institutional candle, so it has to react. It has to give this level. And then when it wouldn't happen, that would now affect my ego because I thought, oh my God, this trade has to win and this trade should win. So what would then happen is I would project my beliefs. I would project what I want to see onto the chart rather than what was actually happening. So when I would go and take a trade and maybe I would lose that trade, when I would go back and journaled it, in the moment it would feel like a great trade. It would feel like, oh my God, this is an amazing setup. But when I actually looked at my journal, I realized that trade didn't even meet my entry criteria and I shouldn't have been taking it. But I didn't realize that because I was blinded by my emotions and my expectations and my belief about what winning and losing was. And because I believed that I had to be right to succeed, I also believed that I had to be right all the time to make money in the markets. So what would happen is when I would lose a trade, I would take that personally. And I would now dive into my journal and change my entry criteria all the time. I would take one trade and lose. Now I'd figure out what happened to that losing trade. Now again, journaling is great, but again, it's not what you do, it's the place it comes from. Because when I would journal one trade and I would lose because of X, Y, and Z reason, I would now implement a new thing to my trading plan straight away without collecting enough data on it. So what would then happen is I'll take a trade based on new criteria, maybe lose again. Maybe now go back to the journal, take another trade, maybe that would now win, but I've now got a complete different entry criteria. And because I've constantly chopped and changed things and haven't collected enough data, I didn't know if this principle actually had validity or if it was just a random fluke of luck. Because again, luck is a big role in the markets, let's be honest here. So again, what changed for me was changing my level of thinking and my mindset and my paradigm from the retail mindset to a more professional-based mindset. Because once I now had this new mindset, it now allowed me to start trading from a complete different paradigm. And it was now that I felt like all of a sudden I could just see so many more opportunities. All of a sudden I just started landing on more profitable trades. All of a sudden my equity curve just started to increase and increase and increase rather than flatline or decline, because I changed from an internal reality. You know, when you understand the principles, right? This is why I tattooed a tree on my hand. As above, so below. As within, so without, right? The external reality is a direct reflection of our internal reality. You know, when I go back early in my years, right, and I'll be honest with you, I had a very chaotic life, man. I had a very chaotic life, man, because I was chaotic on the inside. So because I was not in harmony with myself, I didn't have a clear purpose. I didn't assess my beliefs. I didn't assess my values. I wasn't understanding what I'm doing and why I was doing it. And I wasn't aware of my things like my childhood trauma. Now again, trauma, it doesn't have to be something that's crazy, right? Trauma can be the most littlest thing, like your parents leaving you in a grocery store. To a kid, right, that's a traumatic experience, because your sense of survival is your parents, and obviously losing your parents, losing your sense of survival, you know, you think it's all gonna end. But what actually changed for me was, again, assessing those beliefs, assessing that mindset, and now starting to change it and becoming more consciously aware of the factors that are controlling my life. Because I didn't realize the world was literally a mirror, right? The world is a mirror. So when I was looking at my trading account, and my trading account was red, 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 and also in my life that was red, 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 not literally, like, so when I say red, red, red in my life, I mean poor quality of relationships, getting in trouble all the time, right? Not being happy, getting depressed, having loads of negative experiences constantly happen to me. I didn't know why. And it was because of the energy I was projecting. And the energy I was projecting come from me and my own psyche, my own paradigm. So until I could change that, that was when everything else started to change. Right, again, I'm going to reiterate it. It's not what we do, it's the place that it's coming from. So you can know everything about smart money concepts, but if you're still not profitable, it's because it's not the strategy, it's us. We have to realize that if we want to change in our lives, we have to create that. We have to do the work. You know, one of my mentors asked me this. He said to me, Kiram, right now, obviously, you know, you're not experiencing the results you want, correct? And I said, of course, at the time. And he goes, well, let me ask you a question. I said, sure. And he said, well, have you spent the exact same amount of time and effort that you have developing your technical system? Have you spent that same time, that same energy developing your own mindset, your own psychology, and your own paradigms? And it hit me. I didn't. I spent all my time learning psychology, but no time learning about the mind and the way that I think was going to affect my actions, which was now going to affect my results. So once I actually realized that, I can now start to implement the correct steps to really start to change that. So what I'm trying to explain to you is one of the 3 pillars that completely transformed everything for me. So when I say 3 pillars, what are the 3 pillars? Well, I like to call it the Holy Trinity. Now, don't worry, I'm not trying to be blasphemous here, but there's 3 main areas that I had to start working on to actually start to produce more tangible results. So the first one was definitely the mindset and the psychology. Now, I believe that all of these different, parts of this Trinity are all equally important. There's not one that outweighs more, they're all equally important. Obviously, throughout my mentorship program, I guide all of my students through this on a personal basis and all through steps, and they get all the principles they need to actually succeed. But let me kind of give you a basic outline. So the first one is psychology, right? Because it's not what you do, it's the place it comes from. For me, when I got into these markets, I never came from a wealthy background, a wealthy family. I never had good money management principles. I never had a positive self-image. I never understood money management. I never understood about my own internal thermostat and that your self-image is a direct reflection to the amount of money and the success that you had. I didn't understand these things. So because I was coming from a very financially illiterate space, I was now trying to come in with, 16, 17 years of when I first got started, 16, 17, 18 years of bad money management, no wealth principles, poor self-images. So when I brought that to the markets, what happened was markets actually was like a scalpel that exposed me to all of my own problems in my own psyche. So as I've become a better trader, I've also become a better person, right? Life has got better in so many other ways, from not only the relationships I've attracted to the places I can now go to just my own level of happiness and my own genuine level of effectiveness. What I used to think was that trading was going to make me happy, but I had to realize that it was me that makes me happy. Happiness comes from within. So when I was now coming from a spot where I thought, trading was going to achieve my dreams and make me happy and all this, I had this, I'll be happy when mindset. I'll be happy when. I'll be happy when I quit my job. I'll be happy when I do this. And what it was, I was now chasing, right? And when you chase something, by definition, it's running away. So what I had to do was start to, build my own psyche, become at peace with my reality right now, right? When I was working my job, I had to come to acceptance. I had to realize, and this was a key mindset shift, is also in the markets, because again, how you do one thing is how you do anything, was that, yeah, I may not be able to control the outcome, but I can control the way I react and the way I respond. Just like at a job, right? If our manager tells us to do something, we're gonna do it, no questions asked, right? Because we have to. When I used to work in Sainsbury's, I used to push trolleys in the pissing down rain for 12, 15, 16 hours a day sometimes, right? And I wasn't complaining doing 80,000 steps a day. It was crazy, right? Because I knew this is what I had to do. But why in the markets, or why when it comes to my own success, I'm procrastinating? I'm not putting enough action, I'm not putting enough work. Why am I not getting those tangible results? Because again, it all came down to my self-image. Right? We all act in our accordance with our self-image. So because I didn't genuinely see myself as someone who could manifest a certain amount of income, could live a certain lifestyle, no matter what, I didn't have that belief, so my actions were never in alignment with that person. So until I actually start to do a self-audit, realize, well, who am I, where am I from, and what mindset am I coming from? I'll be honest with you guys, I was brought up in a one-bedroom flat in southeast London with me, my mum, my dad, my brother. Right? We were so broke, I remember the ceiling literally crumbling down when I was trying to take a bath. So what I'm saying is, because I never came from a financially literate background, I never had those skills, I never had those relationship with money, that positive self-image, which then obviously resulted in me acting in accordance with that poor self-image, which then obviously resulted in me having those poor results. So that was the first thing I had to change. I had to change me from an internal standpoint. So the second thing was now developing and understanding true fundamental and economic analysis. You see, when I was in that retail trader mindset, I was under the impression that all I needed to succeed was technical analysis. So before I even open the chart now, I'll conduct an economic and fundamental analysis, which is going to give me my bias, whether I'm risk on, risk off, looking to buy or sell, before I even open the chart. And how do we do that? Based on specific principles of economics, because it's all just one big cycle. And once I started to understand that the same things in history tend to repeat themselves, again, not patterns, it's not the same. They manifest themselves slightly differently. It's the same thing, but different angles, different variations. So what I had to do was develop timeless and tested principles that allowed me to navigate through these different market environments. Because history doesn't repeat itself exactly. What it does is it tends to rhyme, right? Everything is cyclical in nature. Everything has seasons and cycles. Just like day and night, summer, winter, life, death, there's cycles everywhere. So there's also cycles fundamentally, economically, and also in the market. Now we'll dive into technicals in a minute, but I had to learn how to actually interpret fundamental analysis, understand things like monetary policy, understand things like inflation data, understand things like federal funds rates, understand what's going on with the labor market, understanding what's going on with the housing market, and now using the data from that to be able to construct a narrative to now tell us if we're risk on, where if money's flowing out of safe havens, if we're in a risk on environment, because it's not worth having our money in safe havens anymore because the return on investment and the yield is now declining. So people now take their money out of safe havens like the dollar, out of bonds, and now put it into riskier assets like the stock market, cryptos, etc., etc. What determines if we're on a risk on? What determines if we're in risk off? How are we going to know that the N-type per diems are going to rise? How do we know that metals are going to rise? Again, by conducting that fundamental analysis before we even step foot on the chart. So now when we come to the second pillar and look at technicals, the technicals just tell us where to enter and where to get out, but we've already conducted that fundamental narrative to know that our overall directional bias. So now it's just using other principles of technical analysis to now determine where exactly are we going to get in, and then once we get in, can we validate even if this is the correct time to get in? And obviously this is where now we're going to discuss the third leg of the Trinity, which is the technical analysis part. So the third leg of the Trinity was truly understanding how to apply technical analysis correctly. Now, I'm not talking about a specific concept here. I'm not talking about liquidity or the blocks or some rubbish indicator you want to use. I'm talking about taking subjectivity out of the matter, developing principles that can be validated and invalidated like a science. So when I go to the chart now, again, we spoke about it, right? Fundamentals and economic give me my narrative based on the principles I use to navigate that. Then my technicals now it's like a science, right? There's no subjectivity. I don't look at a certain level of demand like, oh, does it look like a level of demand? No, I can validate it and invalidate it down to a science because I have exact principles and exact checklists, exact units of measurement to use to validate and invalidate it. Because again, I don't want subjectivity in my trading, because if I'm feeling a certain way, that can mean, oh, it looks like a trade. If I'm feeling more confident, I may see more opportunities. If I'm feeling less confident, maybe because of a losing streak, I may see less opportunities. But again, that's with the retail mindset. It's based on feelings. We allow our feelings to dictate our actions. But with a professional, what we do is we don't even allow emotions to take over, because we understand A, how they affect our trading and how they cloud our judgment. But B, we also develop those technical principles that allow us to completely bypass them, because we're now trading on a factual basis rather than using our opinions. Rather than saying, oh my God, this looks like an order block, we can use exact principles to validate it if it's a valid order block. Then once price comes to this area, right, we can use exact principles to validate if we should enter this trade now, because we've seen true proof of demand. Again, with an exact criteria and an exact checklist. Not because it looks like there's demand there, no, an exact principle we can use to validate it and say yes or no because it meets or doesn't meet this exact specific metric. And also trade management principles. Once we're in the trade, how are we going to manage that trade? Are we going to move our stop losses? Are we going to keep it the same? Where are we going to take partial profits from? When are we going to take partial profits? Once price comes to this target, how much profits are we going to take? How much are we going to risk on the setup? What market environment are we trading? Are we in a bull aggressive market? Are we in a bull quiet market? Are we trading continuations? Are we trading reversals? Based on market, are we trading order flow? Are we trading structure? What are we actually trading? Because based on the probability of our setup, that should be the amount of risk that we're willing to assume. So for me, if I'm trading order flow, I'm going to significantly risk less compared to if I'm trading true market structure. Now, if I'm trading order flow, I'm also going to manage that trade differently compared to if I'm swing trading structure. So again, you have to be able to know your trading plan, develop if-then scenarios that allow you to navigate through these situations rather than just doing what you feel like. Because if you go on what your feelings do, then unfortunately your feelings change, so are your results. So when I was a noob, when I was under this retail mindset, I didn't have clear principles in place to follow. I didn't have the discipline to even follow those principles once I developed them. I didn't have the right psyche, didn't have the right belief system, didn't have the right emotional management. But once I actually realized and looked in the mirror and said, damn, like I need to level up as a person, instead of stopping trying to change and learn the best strategy in the world, I need to work on me rather than the strategy. And once I realized that was when everything started to click. Now, I want to be honest with you, because I thought the click moment was I'm going to wake up one day and all of a sudden everything's going to work and now I'm going to be able to be rich beyond my wildest dreams. But I'm going to let you in on a little secret. That's a lie. The reality of it is success is like a torpedo. When a military submarine fires a torpedo, it doesn't go straight to its target. Matter of fact, what it does is, let's say this is the target, it will start off in one specific direction. So if this is the target here, it will go straight. But then what will happen, its sensors will realize it's going off course. So then it will course correct, but then it will also realize, wait a minute, it's going off course again. So it course corrects, course corrects, course corrects, course corrects. And it's that constant evolution, that constant changing, and that constant reflection and that constant course correction on what it's actually doing, which allows it to improve and actually get to its destination over time. And that was the reality for me in my journey. It was just getting 1% better every day, trying to connect with the right mentors, trying to connect with the right people, doing whatever I can to invest into education. Look, I've spent so much money in education because I realized that was the best investment I could make, right? For me, I know I'm gonna spend the money other ways, let's be honest. I might as well actually invest it into something that's gonna produce the highest returns on investment, which is investing into me and my own mindset and learning how to actually improve. Whether that's learning from mentors for technical analysis or fundamental analysis. For me, I just tried to find one person who had the results I wanted and tried to emulate them as much as I could. Because if I was learning from, look, I'll be honest, man, at one point I was learning from tons of different mentors. And what would happen is I would have information overload. I'd have analysis paralysis. I'd have one strategy in my head telling me to buy, another strategy in my head telling me to sell, and I'd get so confused and wouldn't know what to do. So when I could follow one person and model exactly what they had, because I knew if I do what they do, I'm gonna have what they have. That was when the upward spiral of success started. And again, it's an upward spiral. It's things will get better one by one. And then what will happen is the compounding effect is gonna build and build and build and build. And all of a sudden, yeah, day by day, it may not change, but one day, yes, you'll wake up because you've now had the series of mini breakthroughs. Now you're gonna realize how much progress you've made once you look back at where you was. So again, it's not gonna be something where you wake up and all of a sudden, you've got a 6-figure trading account. No. What it is gonna be is gonna be a small progression of baby steps, day by day, day by day, day by day, day by day. And on a day by day basis, it may not feel like progress. But when I actually start to look back and think, like, if I'm being honest, man, when I look back and think a few years ago, when I used to work my job, this hotel I'm staying at now, I'd have to work for a whole month to stay one night in this hotel. Now again, I'm not trying to say that to impress or to boast. I'm not really like that. Yeah, I may joke around sometimes, but I say that to say this. It was only until I started working on me when things really started to change. I had this retail mindset where I thought once I learn smart money concepts, I'm gonna be the best trader in the world, and all I need to learn is technical analysis. I don't need to work on me, don't need to understand fundamentals, don't need to understand economics. All I need to know is this magical order block, this magical liquidity level, and I'll be a millionaire. If only it was that easy, right? Bringing this whole thing full circle, I want you to all remember this, that being a retail trader is nothing that is a bad thing. Being a retail trader is totally fine. Unless you're trading at the level where you have direct access to the black box and you are literally executing trades on an institutional level, at only that point, you exit the retail realm. For now, we're all still retail traders. Just don't fall into the trap like I did of being a noob, having that retail mindset, because that was the thing causing my destruction. But what I'm saying is this, right? You can be a profitable retail trader if you're willing to actually put in the work and start to redesign your brain for something different than it was intended to do. Your brain was designed for short-term survival. Same with mine. So bringing it to the markets, your caveman brain goes crazy. Now, I've done tons of videos about the whole caveman brain, but understand this. You have to focus on the 3 trinities. Focus on your fundamental analysis, economic analysis, build your narrative. From there, you can use your technicals with a distinct set of entry criteria. You can give yourself a sample size of trades to execute based on. Stop changing your entry because you lost one trade. Collect 20 trades, 30 trades, 50 trades, 100 trades to actually validate and test if those criteria you're using have some sort of validity. Have entry criteria, have exit criteria, have principles that allow you to validate and invalidate your trades so you can remove subjectivity from your trading. So once I began to work on myself, once I began to get these correct principles in place, which to be honest with you, it came from connecting with the right people, because I'd done so many mentorships, I'd done so many different courses, and none of them got me success. But again, it was the mentorship, it was that individual, to be honest, didn't even have the correct results anyway, and I shouldn't have even been learning from them to begin with. What I'm saying now is the right information is what really changed my situation. It was learning those 3 key things, starting to think in the sample sizes like we do, and starting to realize that I'm not a pattern trader. Once I started to study the market behavior, which now allowed me to generate new principles, now I started looking at the market from a complete different lens. Rather than thinking, oh my God, this order block has to play out, now what is the actual probabilities that this level can play out? Is this even a valid level to begin with? Am I trading order flow? Am I trading structure? Based on that, I can now use my risk management principles to determine how much risk I'm obviously risking. Obviously, on the more riskier setups, we definitely dial down our risk because it's low probability. On the setups that are of course high probable, we don't risk the whole house, of course not. We're still risking minimal amounts to obviously get maximal gains, but we're not being silly with it. As a noob, as a retail trader, I was a victim to my reality. I was a victim to my emotions. I would blame everything that happened to me on external circumstances. It was this mentor, it was this strategy, it was this concept. But once I became self-accountable, once I became self-aware, once I started to put in the work on myself and realized that the hardest project I'm ever gonna work on is me, that was when things started to improve and things started to get better. Now, if you're at a point right now where you're still struggling, you don't know what to do, you don't know how to implement these things I taught you, well, no stress. Send me a message on Instagram. What we can do is hop on a quick 5-minute phone call and see if you're a good fit for my personal mentorship program. Now, I'm gonna warn you, this is not open to everyone because I only wanna work with people I know I can definitely ensure results by the end of the program. And how I'm gonna do that is by talking to you on the phone, getting to know your goals, getting to know exactly the problem you're facing. And now if I can help you, we're gonna see what's possible, we're gonna make some shit happen, and we're gonna run this to the moon. So send me a message on Instagram. And Instagram is in the description of this video. There's a lot of fake accounts going around, so just please be careful. If you don't hear my voice, it's not me. But yeah, send me a message, link is in the description, and we're gonna get you right, man. So with that being said, guys, I appreciate you watching. Go to the comment section. Tell me one thing you liked and one thing you learned from this video. I'd love to hear it. And with that being said, it's been the Master of Coin, and you already know, man, I'm gonna see you at the top, from the top, because the bottom's way too crowded, man. Sheesh.